time. Basil, what's happening, brother?
Hi, Tom. How are you?
I'm doing great, man. I got your charts up here, Basil.
Good. Okay. I'm not sure if I hit the right button, but as long as you can hear me and you can see the charts,
We can see you loud and clear. I got these. I got the dial. I'm looking at the dial right now.
So this is really interesting because if you look at the pattern I drew right here on the left as kind of a schematic or a template, some time ago I said, there's a chance that we're going to come down sharply and then we're going to bounce. How we bounce and how we make this what I call an H pattern, I'll just do this real quickly here. In the Chapman Wave methodology, we're looking for straight lines up or down. You can see this is the one that coming on the downside there. Or you can get a cup formation or an arch formation, or you can get a mix. And I got this in red because the lowercase h, we call it a dreaded H, because if it takes out the left side low, it can keep going down quite a bit. And on the right side, this is very positive. It's green. It is the reverse Y pattern. Take out the left side high, can keep going higher. So this is what we're looking at. You've got the H pattern, the 24,000 in the Dow, 24,843 low. Had a very strong bounce to 26,611. And then we've used 1, 2, 3, 4, 5, 6, 7, 8, 9. This is the 10th bar, and we still haven't taken out that left side low of 24,843. The low 3 days ago was 24,971. So what happens in this particular pattern is that if you do not take that left side low, well, the chart doesn't take out the left side low, but usurps energy, downside energy, you can then get a sideways consolidation and not using price, but using time, and it can take on the pattern that I call the lowercase h goes to a lowercase m. In other words, there's another arch formation forming. So as long as we don't, first level is 24,971. That's the key support, very near term. More short term, we've got 24,843. We start to see the Dow trading below 24,650. That's a problem because now you're using price and time. So far, this is very good in action. One of the reasons why for subscribers to my opening call, I've been wanting to keep our long positions in the Dow. The last one was at 210 in the diamonds, and we're now at about 257. So it's a very nice gain. I want to try to keep that gain. Is that there's a chance we use up a lot of downside energy, but at the same time also upside energy. And what that results in, you can see the MACD's declining, stochastics declining. But the most important thing is that the pattern says if we can trade within these boundaries, we can keep that up for a little longer. And then that second arch is the one that's absolutely crucial, because if that then takes out the 24,800 low, that means now you've used up support energy and you've broken to new lows, and that opens up the downside. So I'm looking at this and saying, well, so far the pattern's met. And of course, there is always that buying, the end of the month, especially the end of June, going into early July, and that's really helped. And you can see these two big green candles. It's very nice, but we haven't really broken above the 14-period moving average. So I'm looking at this and I'm saying, if by today's Tuesday, days just fly by. Today's Tuesday. If by Thursday, the Dow, it doesn't have to close, it just has to squeak into the 25,850, preferably touch 26,000. That'll say, yep, we're using up time. So those are the parameters I'm looking at. And so far, it's held well, and we've still got our core long positions. We like what's going on. We're going to watch this very closely to see it.
Folks, come over to our website at TFNN. You're going to see right under featured content, the opening call. You can hit it, subscribe, 30-day money-back guarantee. Basil, have a great one, safe one. We look forward to the show tomorrow.
Thank you very much.